everyone. Welcome back to The Finish Line. I'm your host, Vina from Fin Mortgage. Today, we're talking about something every homeowner should understand, protecting your biggest investment. Joining us is the head of Creditor Insurance at Manulife, Mario Cloutier, to break down the Manulife Mortgage Protection Plan, what it is, why it matters, and how it can safeguard you and your family when life takes an unexpected turn. Let's dive right in, and the floor is yours, Mario.
Good afternoon. Good to see you.
Good to
Thanks
see
for
you too.
having me. Yeah, I've been in this industry for longer than I care to admit, unfortunately. I know everybody believes I'm 25, but I'm not. So I've been in the mortgage broker industry for the past 30 years now. So started back with another financial institution that's no longer in the market today. I did pretty much everything and anything. I was in sales and customer service, collection. I did underwriting for a while. And I've been with Manulife now for the better part of the last 14 years.
Oh, wow.
Having a lot of fun at it.
You come with a wealth of knowledge and experience, which is always comforting to hear when we're working with our partners.
Thank you. I don't know if my father used to say that experience is just making more mistakes than the others. So on that department, I think
He's not wrong.
Yeah,
Yes.
on that department, I think I've been able to
You learn from your
experience that.
mistakes. They're all
Absolutely.
lessons, right?
Absolutely.
So I'm going to dive right into what Manulife does and what it is. But for listeners who may be new to this concept, what exactly is the Manulife Protection Plan and how does it work?
Yeah, so that's a great question. I think that in today's day and age, it's a little confusing for the consumers because there's different type of insurance when it comes time to get a new mortgage. The first one they'll get to encounter as they go into the journey of purchasing a property may very well be what's called a mortgage insurance. So you deal with institutions like CMHC, Sagen, Canada Guarantee, and they're going to provide you with an insurance that actually designed for the lender so that if you go and you don't have a 20% cash down, you'll have to have that kind of insurance in order to be completing the acquisition of a property. And then you've got the home and auto insurance, what's called in the jargon, the PNC, which is the protecting your property in case there's a casualty, so fire, theft, what kind of stuff. And that insurance is mandatory in Canada. You absolutely have to have it if you're a homeowner and there's a mortgage on your property. The third one, which is the one we're doing, is called Mortgage Creditor, and it's designed to protect you in case of a life event, whether it's a death or disability, and protect your succession, your family, your loved one, and your siblings from having to support the mortgage payments as something was to happen to you. So it's not as known as the first two, but is as equally important as in today's situation.
And a lot of people forget that insurance, right? So and I think
Yes.
a lot of us actually don't even touch or dive into providing that service.
Unfortunately, you're right. 1 out of 3 Canadian consumers going to get a life event that's going to require for them to be off work for at least 9 months during their life cycle. Life happens, moments happens, and there's not a better time. And maybe I'm jumping ahead of myself, but there's not a better time to make sure that you have the right plan for the future than the time where you actually completing the transaction, whether it's a purchase or refinance, to address that question. Do you have a plan in case something were to happen?
Absolutely. No, I agree.
Yeah.
And why is the credit insurance, significantly mortgage protection, so important in today's market? I know you've touched a little bit on it,
Yeah.
but why is it more important today than it ever was before?
Like I said, 1 out of 3 is getting a life event. In the last couple of years, more than 30% of our claims has been regarding mental health situation, which is covered by disability as well. The post-COVID era COVID era is behind us now, but post-COVID era is difficult on the Canadian consumer. The level of stress that's going on now is substantially greater than it was 30 years ago. And I think it's important. The financial obligations of our consumers are far greater than they used to be. Interest rates are high. The house prices are high. So it's important to have the right plan to be able to support that lifestyle that you cherished and work so hard to be able to maintain. So the conversation about the right plan, and forget mortgage creditor for a second, just the right plan about making sure that you're adequately protected for all aspects of your life is so fundamental. And who better than the mortgage brokers that are industry experts when it comes time to talk about transactional financing to have this conversation with the consumers?
I think you said it well, and you've laid out all the important facts. But what do you think is the biggest misconception homeowners have when it comes to mortgage protection that stops them from getting this most
Yeah,
important
great
protection?
question. Wow, that's a great question. I appreciate it. Thank you. The first one we hear is, oh, it's the same thing as term life, but it's much more expensive. They serve two different purposes. I know it's not that common in Toronto. Being from Montreal, I have two cars. One serves of taking me to work every morning. It serves a purpose to get to A to B. And then you want to be a soccer dad on the weekend, so you need a bigger car to take care of the soccer balls and the hockey equipment and taking the kids. The two cars are two cars, but they're two different and serve two different purposes.
Yeah.
So the misconception that term life is a better product or MPP is more expensive, or this is just misconception. They serve two different purposes. One's to take care of the liabilities, whereas the other one is to maintain the lifestyle. And the pricing structure is different. So obviously upfront, the term life might look like it's cheaper, but the MPP price or mortgage protection price is consistent for the remainder of the life cycle of your mortgage. So if you get a price today upfront, it might be the first thing, but in 25 years, from now, you're going to have the same price. What I like to use as an analogy for that, and people will relate to that a bit more, is if you have a mortgage payment, you walk into an office and you talk to your broker and you say, oh, I can give you a mortgage at 1%, or versus getting you a mortgage, what are today's rate, 399, 389? Mm-hmm. Well, obviously it looks like 389 is more expensive, but 389 is a 5-year term, whereas 1% is 1% a month. So which one becomes more expensive? So I think it's important to dig in when you have those comparisons and make sure that you fully appreciate what you pay for and what is being covered with it.
I think another thing or roadblock that we get with clients is when they're trying to decide between traditional life insurance and mortgage protection, which are two different things, right?
Yeah.
What do you think the difference is, and how does one decide? Like somebody might say, I have life insurance, I already have insurance, I'm protected. I have, more coverage than I really need for my assets and liabilities.
Yeah, great question again. Interesting fact about this. The Canadian Consumer Financial Agency, which is the body of regulation that's supposed to give the guidelines of Canadian consumers on what to do, what's a good debt ratio, what's this, is saying that a Canadian consumer, in order to be able to maintain the lifestyle in case of life event, should have anywhere between 7 to 10 times their annual income with coverage.
That's a huge number.
That is a huge number, and you'll be interested to know that only 6% of the Canadian population has that kind of coverage.
And that's a very low number.
that is a very low number. So to the argument, oh, I've got coverage at work. I mean, sure you do. Do you have enough? Is it the right one? Like I said, we started the conversation by talking about the different type of mortgage insurance that are available just for a property alone. So it's the same thing when you talk about life insurance. So life insurance, in the pure terms of it, so whether you talk about term life, universal life, whole life, should be designed to be able to maintain your lifestyle if something was to happen. This mortgage creditor insurance or creditor or balance protection insurance is designed to take care of your liabilities if something was to happen to you. So something happens tomorrow, mortgage creditor balance protection is going to take care of your debts so that the rest of the money that you have in a term life or UL or whole life will be able to get your elders or your succession to be able to maintain the same lifestyle as you when you were in and being the primary income earner for the family.
So what would you say to somebody that thinks, I'm healthy, I'm fine, like I don't need this. Why do I need this right now?
Yeah.
What would you say to somebody like that? And this applies to even them getting regular insurance versus mortgage protection plan, right?
Yeah. Listen, you don't take insurance for when you don't need it. It's just the same way you don't ask for a credit card when you need it. You ask for a credit card when you don't need it. One of the first thing I learned when I joined this industry 1 trillion years ago was from a financial advisor who was showing a presentation, and he was being asked by the customers, like, when is the best time to subscribe or underwrite life insurance? And his answer was 3 years ago. So the way life insurance works, whether it's creditor or just regular life insurance, it is being underwritten, and the risk profile is different. It's your age, your health condition, and different factors like your level of stress at work. Are you a smoker, not a smoker, that kind of stuff. So the longer you wait for the life insurance, the pricier it's going to get. And this is why when you look at a grid of coverage, you know, one of the wisest strategies of investment that's being done today is financial advisors are getting life insurance policy in place when your kids are 5 years old, 6 years old, so that they can actually have the proper coverage for the longer period at the cheapest rate possible. So the best time to subscribe a life policy is 2 years ago, just because as you grow older, as you evolve in your life, the mitigating factor that makes it more expensive are going to be more and more present.
It's like the saying that goes, right? You're not getting any younger.
Yep.
So as you get older, you do encounter more complications or more health concerns, and we live in a world where, you know, we're stuffing our faces with all these processed food and all this stuff. So like you don't know what kind of health conditions you're going to come across, right?
Offline, we were talking about the food in Paris. Obviously, this is another example for that, for sure.
What are the biggest risks homeowners underestimate when it comes to protecting their largest debt, which is obviously their house?
It's understanding the consequences of that. So people are working all their lives to get to their dream property, and it requires a lot of efforts and sacrifice. In today's day and age, this can be gone in seconds. Just by not having the adequate coverage in the
Which
end.
is the reality, which I think a lot of homeowners don't understand, right?
Yeah.
They work so hard to get there and get that property, but they haven't worked on how they would protect it if, you know, they lost everything that they worked for to get there, right?
Yeah. And one of the other element that we hear is it's like single family owners, like the one property owner doesn't have any kind of families. Obviously, there's an expectations that if something was to happen to, you know, one of the partners, the other one would be able to take care of the mortgage, which we find, unfortunately, that 6 times out of 10 is not accurate because you need the both income to qualify. But even the individual owners to the property, like life is one thing. You pass away, and so be it. You have no succession. But what happens if you are in a disability situation where you can't work for 9 months? Who's going to take care of you?
It's funny you say that because shortly after my family and I immigrated to Canada, my dad had a stroke.
Yeah.
Right? He had life insurance but didn't have disability. So our family didn't have coverage for that, right? And he was a breadwinner. So people don't often forget the critical illness part of it, because what if you don't die?
Yeah.
Right? If you die, then, you know, you're not here. That's a different story. And if you had life insurance, other ways that would eventually cover your mortgage. But what if you are still here but unable to work because you have a critical disability?
Yeah. Sorry about you, Dad.
Yeah. No, thank you. What are the key features that make Manulife's MPP different from other creditor insurance offerings on the market right now?
Yeah. I don't like to brag about our product. No, I really don't, because what's important for me is for the Canadian consumers to have the conversation with their professional, whether it's you know, a mortgage broker, which are the most qualified person to do that, bar none, or financial advisors. It's all about making sure that you get the right features and the right protection for you. Why is MPP one of my favorite solutions? I'm an MPP customer, and I was before I started to run MPP. Is some of the features, like stuff like you know, as trivial as, let's say you have a disability claim. While the claim is being processed, MPP, irrespective of if you're eligible or not, they're going to cover the payment with your financial institution as they're processing the claims. Because if you're facing a life event, one of the most stressful situations is, okay, I have to deal with all of this right now. So we do it for disability. We also do it with life. One of your loved one passes away, you have to deal with the grief. You don't want to have to deal with the mortgage payment for the next 2-3 months. So we'll cover the mortgage payment. The other thing is that the product is designed for the customers. It's not designed to, unfortunately, some of our competitors, financial institution, use this as a retention tool. So you go into any financial institution today, you walk in the branch, they'll say, we'll give you that coverage, which is fairly limited, is not as extensive as MPP per se, and it's not portable. So what portable means is, let's just say today you come to see your mortgage broker. The best option for you for your financing is with Bank ABC. You want to get the MPP coverage, you get it with Manulife. And then 5 years from now, life changed. Your situation changed. You got a promotion, new kid in the family, and you need to either move property or move mortgages. And you go from Bank ABC to Banks XYZ. Well, your MPP coverage can follow you with this new property. So that's a feature that's really popular with the consumers because we have the consumer's best interest at heart. I think if I have one piece of advice for the customers is when you subscribe into a creditor protection program, make sure to ask the question, is the underwriting adjudicated at the time of submission or at the time of claim? What I mean by that, and this is what MPP does, is, because it's a product that's designed on your health and your situation, there's always going to be a health questionnaire about it. How and when is it being assessed? So when you come to MPP, you submit your application today, we're going to review the application immediately. So therefore, you have no surprises 3, 4, 5, 6 years down the road. All you got to do is process the claim. Bob's your uncle. Most of the financial institution, what they do is actually do the opposite. Is they'll submit the claim, submit the application, they'll give you coverage immediately, but then assess 3, 4, 5, 6, 7 years down the road if you were eligible for that coverage. So there are situations where customers can be facing getting an answer from the FI 7 years down the road and say, sorry, you were not eligible. We're just paying you back the premium, but deal with the mortgage. So you got to be careful to make sure that the protection is being in effect, complete immediately.
And I think that's where people start not believing in these protection plans.
Absolutely.
Right? Because they had that one sour experience from another institution, right?
Yeah.
But can you walk us through like the eligibility process? How simple is it, like for our consumers watching today? Like if they are now looking into their mortgage or even their refinance, like how simple is the process?
Yeah.
What can they expect?
I think the process is fairly simple. If you compare it to other similar products in the industry, the first step is obviously as you go through the mortgage application with your broker, there's a quote or a form that's being submitted about MPP, and it has basic information. So your name, address, mortgage amount, age, and a couple other information, phone number and email address. And then there's 5 health questions. Typically, there's 5 health questions, which are basic questions. Have you had cancers in the last 24 months, heart condition, that kind of stuff. And you should answer as truthfully as possible in the questions. If the answer to those 5 questions is no, you're automatically covered up to $500,000. If it's more than $500,000, then you need to go to underwriting. So what that's going to happen is you'll sign the form, send it in to Manulife, and a life insurance agent from Manulife will contact you to go a bit more extensively over the questions. And if there's one that you're not sure of and you want to talk to an agent, you always tick a box. Within 5 days, this is going to be processed. We'll send it to adjudication. You'll get an answer within the first 15 days. And I would say that the vast majority of the clients that go through the process get some kind of insurance. Because this is another thing with MPP. You can have guaranteed issued coverage. Depending on your health condition, it could be just for accidental death and disability. So you die in a car crash, your family will be covered. A little cheap.
Touch black.
Yeah, knock on wood. It will be a little cheaper, but more restrictive in the type of coverage. Otherwise, you get the full coverage quickly and easy. And if you have any further questions, the good time to do it, that may not necessarily be with the mortgage brokers, but to talk to the agent that's partnering up with the mortgage broker.
Yeah. So with our clients, actually, Cajun and I, we always, and thanks to Daniela, who did a few presentations with our team, is we always check the box for a call from an MPP rep.
Yeah.
Right. So that way it's not about the kickback or anything that we get, but it's at least we need to put our clients in front of the right people so they can have the right conversations.
Absolutely.
Because you're better at selling what you do than what we can do. We do mortgages. We're good at that. You're Manulife, and this is what you do, and this is your bread and butter. You're better at explaining that, right?
Absolutely.
So thank you for talking us through the process and eligibility. We've talked about the benefits and the hesitations from a consumer's perspective, the process of how, eligibility and claims. But let's talk about the cost, because I think sometimes we know the benefits of certain things, but it's the cost that also kind of stops us from getting that further protection, right?
It all becomes a question of priorities. I mean, the cost should not be. First of all, there's several options that are available, but once we've understood the merits of and the importance of having the proper protection, I think then the cost becomes secondary. I know it's easier said than done, but why do people choose to travel every year down south for 1 to 2 weeks? Just because they see the value into it. So I think it becomes a question of recircling and repurposing the discussions about the adequate protection and the need for it and the consequences of not having the right protection. Really, when somebody's talking to you about the price, they're not necessarily saying, "I'm not going to do it." They're saying, "I wish I could do it because I see the value, but I can't really afford it." And the importance of getting the coverage much younger. I mean, in some places of the country, it can be as much as a coffee cup a day to be able to get the coverage. And now there's options that are available in the market, whether it's partial coverage or any type of coverage. I would suggest, depending on your situation, that sometimes you may have to choose between life and disability. For self-employed people, disability is bar none more important than life. You just gotta don't stop at, "I'm just not going to do it because the price is too expensive." Have a conversation with a professional, weigh in what your options are. And sometimes it probably has to go with some of the budgets as well. Think about the fact that if you have to choose between the life coverage and a second restaurant every week to go, well, just appreciate the fact that if you don't take the coverage, not only are you going to have to skip the second restaurant, but you may likely have to skip the first one. So it's important to just basically assess that. So when customers are saying to you it's too expensive, it just means I want to understand how much more I need it. That's all.
How about the clients that don't necessarily think it's expensive, but are thinking, why am I going to pay for something I will never use? And this is how I used to sell it to my clients in the branch, is think of car insurance. You have to have car insurance, right? And you don't want to ever get into an accident, right? God forbid, or be like in a situation where you have to use the benefits of your car insurance, but you need it. And hopefully you never have to use it. So how do you tie that back into?
Yeah, for sure. I know I sound like a broken record, but 1 out of 3 Canadian consumer is going to get a life event that's going to require for them to be off work for 9 months. We just qualified you with your mortgage at 44.1 and 39.2. What's your plan in case something that happened? There's a few of us in the room today. 1 out of 3 is going to get a life event. Brace yourself. It was me. I got it. So, but what if it happens? It's 1 out of 3. You've got more chances to have a life event than to be hit by lightning for sure. But it's pretty strong and compelling. More and more people today, in today's day and age, have a situation that they've faced or have lived that they can relate to the story. There's an influencer called Simon Sinek, and he talked about the fact that when you do stats with people, if you relate to numbers, you will never get the same success as if you relate about Bob Smith. That is the person behind that statistic. So I think you want to be compelling with the stories, and I wish to God none of the brokers ever have to face with that. But just close your eyes for a second and picture yourself in being in that moment where you get the phone call where their life just changed forever for a minute, and you want to be in the superhero moment. I have one of my former colleagues at Manulife that lived a situation like that, and her family is out west, and she's based out of here in Oakville, and she got a call from her sister one day because her husband had just suffered a major stroke and wasn't able to do that. And on the way there to go and help her sister in the plane, she's thinking, okay, I'm going to have to move to Saskatoon. I'm going to have to do this. We're going to have to make those changes. And then when she landed, it dawned on her. Yeah, I think when we did their mortgage a few years ago, we put Creditor Insurance. it completely turns your perspective on life because you got that superhero moment where you say we're not gonna have to change our lives entirely. We're gonna have to be able to build on that, and thank God Manulife is gonna be able to bail us out of that situation. So when you have those compelling story, it personalizes the conversation about it could be your neighbor, your friend, someone at work. You don't want to be that person that's on the wrong end of the stick here.
Absolutely.
Yeah.
Thanks for sharing that
Yeah.
story. How does Manulife work with mortgage brokers to ensure clients are protected or and understand the protection options?
Yeah. Listen, Manulife is a world-class organization. More than 34% of the Canadian consumer have a Manulife product on their shelves. And I think one of the things that I'm particularly impressed is we only operate in the independent advice channel, meaning that we don't have a direct-to-consumer network. And so we pride ourselves on having a great working relationship with the mortgage brokers and the financial advisors, understanding that they are the true professional in giving the client the best advice. Now, where we're going to come in there is basically support the conversation between the brokers and the customers and be able to offer a slew of protection solution to the client depending on what the conversation's about and what the client's objectives are. We value the fact that the broker will always own the relationship and that the trust factor and the emotional connection for the consumer is with the broker, not with Manulife. So we come in as the partner to be able to work hand in hand with the brokers and making sure that the consumers feel like they're adequately protected.
And on that note, is there anything you wish like us brokers understood more about MPP when we present these options to our clients?
You know, I love this question. I feel like this industry has come such a long way in the last few years and in such a good direction. And it's funny, I was in another podcast a couple months ago and somebody was asking me the same questions. And I think broker are coming on really hard on understanding the importance of being properly educated and not relying on misconceptions with respect to, you know, the journey mapping of working with your clients all the way through the transaction. And I think I need to stress the fact that we need to continue on that journey together. The resources are available. You know, talk to your partners, talk to other mortgage brokers, talk to us, talk to, you were mentioning Daniela, who's the local representative here. She's phenomenal. Talk to her so that you can continue to educate yourself and making sure that you address the concerns of your customers and you don't have any misperception on that. So I think you guys are doing great. Continue on that path. And I envision that, you know, in a not too distant future, we'll be able to protect every Canadian consumer in their dream of homeownership.
One last question. All of your answers are leading to my next question, which I love. And to wrap this session up today, for our listeners who are listening, where can they go to learn or speak about, about their protection plans? Because oftentimes what we do is Google, right? We Google, somebody refers us as a mortgage broker, we Google this person. Or we want to do our research before trusting that individual with the service that they provide, right?
Yeah.
So for our listeners today, where can they go to learn more about MPP or even speak to somebody directly at MPP? Eventually you'll tell them we have to go through a broker, but
yeah. Oh, absolutely. I think the best step is obviously the mortgage brokers first and foremost. And I'm of the opinion that the mortgage brokers has a lot more to offer than just the best rate, but actually the conversation about the transaction. I mean, 40% of the portfolios of the customers is often going to be in real estate, but it leverages a whole bunch of questions. So initiate the conversation about what your goals are in life, goals and aspirations with your mortgage brokers. They are the true specialists.
thank you.
And no, I mean that. I mean, I've mean that for the longest time, for as long as I can remember. And these people are going to be able to direct you to the proper resources. And you know what? Full disclosure, I think in many cases it will be Manulife, but in some other cases it may not be Manulife. As long as you have the conversation with someone you trust and care about, you've already did your research, you're trusting your mortgage brokers with a lot of confidential information. So I think I would push it one notch further and have this conversation about, you know, the protection. And then thank God you have access to directing them to the right people at Manulife, and sharing with us what their objectives are, and then we'll make sure that we give them the same standard of services that you did, and continue on the alley map of what they're looking to do. So yeah, I mean, sure, you can go online, but listen, this is, I like to use this analogy. Is like, I have a car, I know how it runs, it gets me to point A to point B. If I open the hood and see something's broken, truth be told, is I'm not going to try to fix it myself or figure out what's going on. I'll go to a mechanic. I have a good mechanic that I trust. He's been my mechanic for a number of years, and I know he's going to do right by me because we have an emotional connection to that. So I think it's okay today, and we need to stop thinking that we need to do everything by ourselves, and rely on the specialists, rely on the people that actually have an expertise and live and breathe it every day. So I'm suggesting to our consumers, come to your mortgage brokers first.
Thank you, Mario, for today's
Thank you.
informative session. I really appreciate it. I took away a lot of things. So again, thank you. And thank you, viewers. If you tuned in today, hope you learned a lot. See you on the next episode of the Finish Line podcast.